Let's see. My camera's still not coming on, but maybe it will.
It may be just the sheer number of people creates like a lot of band or something about having it uses a lot of bandwidth. So
Yeah.
I'm going to take my picture off just to see if that helps a little bit.
So let's talk about why tax preparation matters. So first, all businesses must file taxes. I've been teaching about businesses for many years now, and this is something that I want to make very clear. If you are a registered business, you must file taxes. Even if your business had no income, you still need to file a return. It's important to prepare for taxes really as you're starting a business. So a lot of times people will wait for when it is tax filing season, and that can create a lot of stress. So I'm going to encourage and invite everyone to start preparing for taxes the same day you are starting to plan a business. And that's really why we're talking about this too. Why preparation matters is you can avoid penalties and fees. You can save money with deductions and credits, and you can build a stronger financial future for your business. When I started my business back in 2014, I thought I had everything planned. I was working with a certified public accountant, a CPA. I was documenting all of my income and my expenses, thought I knew everything, and I still received a little postcard in the mail from the IRS saying that I had made a mistake and I had not filed a certain type of business tax, which is called sales and use taxes, for my business. And I remember calling my accountant and saying, "How did we miss this? Am I going to go to jail?" And I was really scared. And so that's why I am also passionate about teaching about business taxes and preparing for them, because even when you think you're really prepared, mistakes happen. And so I didn't have a class like this before I started my business. And so I wish I would have taken a class to understand all the different types of taxes and why preparation matters. Now you can see that I'm here teaching class tonight. So my tax mistake was a minor mistake. I did have to pay a penalty fee, but usually when you make mistakes early on in business ownership and they are just genuine mistakes, usually they just ask you to correct it. They might provide you a fee, like a small fee, but really penalties and major fees come when you're just really avoiding compliance, when you're not submitting taxes or you're not paying or you're not reporting accurate documents. And that is something you do not want to do. Let's talk a little bit about the key documents that you need to keep track of throughout the year for taxes. So we're coming up pretty close to 2025, right? So the start of a new year. If you're not keeping record of these things, even for your own personal income taxes, maybe create a new year goal to start on January 1st, keeping really good records of all of these things. So first, you're going to need to make sure that you have income records. These are invoices, sales receipts, and 1099 forms. This really just means that you need to document every time someone pays you. Every sale that you make in your business needs to be recorded So at the end of the year, you can share with your accountant the amount of money you made, your profit. The second thing is your expense records. These are all the ways you had to spend money on your business. So you're going to want to make sure that you're keeping receipts, bills, credit card statements, anything that you're spending money on, you are recording that. The third is payroll records, and this is only if you have employees. Many startup businesses do not have employees, but if you do, make sure you're keeping record of that. And then the last thing, if you do have previous year's tax returns, that is very helpful documentation for you and your accountant to have when preparing for taxes. So what is a 1099? So a 1099 is a document that shows how much someone paid your business. So every year when I'm going to file my business taxes, I have to make sure that my accountant gets a copy of all of my 1099s. So in the United States, you must issue or receive a 1099 form if payments meet or exceed $600 in a calendar year for certain types of income. So let's say, for example, that in my consulting business, a chamber hired me to do consulting services, and in 1 year, they paid me $5,000. I will receive a 1099 in January from that chamber. It will have their business information, my information, and the amount of money they paid me in that calendar year. So in this section, it would show $5,000. That would also match my records that I was keeping, right? When I talked about we want to keep records. And so my accountant can see that that chamber paid me $5,000. Now, let's say I took a few jobs within my business where someone was just paying me $50 here, $60 there for different services. I would not receive a 1099 for those because they are lower than $600. So it is my responsibility as the business owner to make sure I'm documenting those sales in another way, because I will not receive a 1099 from those customers. So where can you find these records? If I'm asking you that it's really important to keep these records, here are some ways that you can go to find your records. First, you need to make sure you have a separate business bank account. A lot of business owners get in trouble or at least have a big mess on their hands because when they start their business, they are combining their business money with their personal money. I don't want anyone here to do that. So it's very important that you have a registered business first and foremost, so you can open a business bank account and you spend your money for your business, and you with that account and the money that you make in your sales from your business hits that account. It never mixes with your personal account. The second thing to do is to make sure that you have a separate business credit card. Now, that might be attached to your business bank account. You might want to have a business credit card separate from that. Those are all your decisions, but make sure that whatever type of credit card you have for your business, it is a business credit card. Again, it is not a personal credit card. It is not the card that you're using to go to the grocery store and shop, or it is not the card that you're going to Walmart to buy toilet paper and diapers with. It is a separate business card. Now, if you're a childcare business and you need those things, right, then you can be obviously purchasing those things, but the main point I'm trying to make is do not mix your personal money with your business money. And that's going to help keep your records much clearer. So when I started my business, the first thing that I did before ever taking a sale from any customer was I made sure that I started a business bank account. I did what is called bootstrapping, which means I was going to transfer money from my personal savings into my business bank account to start my business. So I transferred $5,000 from my personal savings into my business bank account. And then from there, I was able to start purchasing the items I needed to start my business. That way, I could give my accountant, or if I was doing my bookkeeping and keeping my records, I could just go to my bank statements and my credit card statements, and those would be all of my business transactions for the year. No questions asked, because I wasn't mixing my personal funds with my business funds. And then the last thing is, make sure you're documenting all of your sales and expenses every month. It's much easier to get to the end of the month and make sure that your sales are recorded and your expenses are recorded, and you know how you're spending your money, you know how you're making your money. It's much easier to do it at the end of every month versus waiting till the end of the year to think about all of those things. You might not remember exactly what a purchase was or why you bought an item at the end of the year, but you usually will remember those things if you're keeping good documentation and you're doing it at the end of the month. Now, as I was talking about this, I feel like I saw a hand go up. Does anyone have questions? Okay, if you do, please raise your hand and I can answer your question. So, some other documents to keep every single month. And when in doubt, if you're like, should I keep this or not? When in doubt, save the bill, save the receipt, save the document. I have a folder that anytime I make a business transaction, so I go to the store, I order something online, or I have to hire a professional and they send me an invoice, I'm making sure that I'm saving those in a folder for that year. So I have those to document and show my accountant. So again, when in doubt, if you're like, should I keep this or not? It's just better to keep it so you can give it to your accountant. Sorry, I have a spelling error there. And then so it's much easier to give your accountant something that they don't need versus something you don't have. So here's some things to think about. If you're a business owner, you should be keeping track of your cell phone bills. Now, of course, there's going to be for most people, you will probably be having a combined business cell phone and personal cell phone, but you're going to want to keep those bills because your accountant will be able to use a portion of your cell phone bill as a business expense. Another document that you're going to want to keep is if you are operating your business out of your home, and that might mean you do kind of the administrative things out of your home, or maybe you keep some of your supplies and materials in a closet at your home. If you are doing any of your business out of your home or your garage, keep the mortgage and rent bills, property taxes, and utility bills those will be write-offs for your taxes based off of the square footage and the percentage that you use at your home, whether you own it or you rent it. Another thing to document is the square footage. So, for example, I work out of my house for my business. And when I serve clients, usually I go to their place of business. But while I am not conducting my consulting or my events, I'm doing my business from my house. I also have supplies that I need to have for my business. So, where I have my office and where I have my supplies, I measure the square footage of that and keep record of that. Some years my square footage decreases because I don't have as many clients. So it means I don't have as many supplies and materials and it's not taking up as much space. And some years it increases because I have a lot of clients and a lot of products and materials that I need to store and different projects that I'm working on. And then environmental things happen, things out of our control or external things happen. So in 2020 with the pandemic, almost every square foot of my house and my garage turned into my business. I was using my garage as a photo studio. I was using my bedroom as a recording studio. I was using my office space to do my office work. And so my square footage went up significantly in that year. Another thing to make sure that you're tracking are the miles that you're driving for your business. So if you do own or lease a vehicle, make sure that anytime you get in that car to drive for any reason that is around your business, you're tracking those miles. So those are things that you're going to be wanting to document every year. So how do we stay organized year round? Again, we're filing taxes every single year. Leah, you have a question?
I need to have Rahel meet with Billy in a breakout room. So Rahel, if you could click join the breakout room. Thanks. Sorry.
No worries. So some of this can feel pretty overwhelming, right? There's all these documents we have to keep track of, things that we need to measure, math that we need to do. And so it's really important to start off by just getting organized around your business. And a lot of times what works for one person doesn't work for the other person, but there are some best practices, things that usually work. But sometimes you find different ways that work for you. So we're going to have some time in this section to share some ideas of how you stay organized yourself. But some of the recommendations that I have and some documentations that I want you to be keeping all the time. So don't throw away these things. And yes, I will, I'll make sure that I get rid of the typos, but I will make sure that Teacher Leah gets a copy of this presentation and then any of the links or websites I talk about tonight as well. So business documents you should be keeping every year are any legal documents. And so a legal document could be that you hired a business attorney to help you draft a contract. 2 years ago, I went through a divorce. And so I had to hire an attorney for my business because my business was an asset that I needed to make sure that I was protecting in that divorce. And so I had to make sure that I could keep those legal documents. So when it did come to tax season, my accountants understood what portion of my legal bills were related to advocating for my business versus other areas that would impact what would be impacted in a divorce. So legal documents can be a wide range of things. Tax documents. So like I had mentioned earlier, every year we're filing taxes. So I actually keep a fireproof safe in my house. And every year, once I file my taxes, I put a folder from that year into my fireproof safe. So since I started my business back in 2014, I actually have all my tax documents in a folder from every year. It is a best practice to keep tax documents for 7 years. After 7 years, it is okay to get rid of them, but a best practice is keeping tax documents for 7 years. And again, if something happens to you or your business and you do find yourself in a legal situation, you're going to need to trace back all of those documents as well. So it is just a best practice to save your tax documents every single year and know where they are. I know one of you, when you were sharing, shared, someone else does it for me. And it's very common. I hire a CPA to do my taxes for me, but it's important that I know enough about taxes and about my documentations and about my records that I can ask my accountant really good questions and also make sure that my accountant is a good accountant. Like every occupation, there's good people and there's not so great people. And so educating yourself about taxes is only going to make you better at deciding who you should work with and if you're making the right decisions and the right choices. I usually don't recommend that people file their taxes themselves. I think it's very important that you do work with a licensed tax professional. But it is really important that you have enough understanding just to keep you and your business safe and protected and doing the best that you can. Other documents to keep is any employment records. So these could be anything from, W-2s to health insurance documentation. So anything that you're receiving from employment records, or if you are the employer, making sure that you're keeping those records as well. And then financial documents. So these are things that if you are keeping good documentation, which I hope you all are, that would be your profit and loss statement. So making sure that you're documenting all of the money that you make and all of the money that you spend. So some ways to stay organized in this is using a digital system like QuickBooks. Women Venture has a QuickBooks program, and also our QuickBooks facilitator, Ali, is going to be joining you all this year as well to do some QuickBooks training. But a system like QuickBooks for business owners and even for personal use is a really good system to keep your financial statements in order and organized. It also allows you to pull reports really easily and look at your income and expenses month over month, year over year, and kind of see how you're doing financially. QuickBooks is also a really user-friendly tool that links to your bank account and your point of sales system. And so it's a really effective way to stay organized. Another way to stay organized, and I might start to sound pretty repetitive tonight, but these are very important topics. Keep your business and professional expenses separate. How do we do that? Does anyone remember from the last section we just talked about? what is the number one way to keep business and personal expenses separate?
Was it the different bank accounts?
Yes, exactly. Keep different bank accounts. So don't have a personal bank account that is connected to your business bank account. Make sure that they are separate. And if you do open a credit card as well with your business, make sure that that is separate from your personal. And then the last is schedule monthly check-ins to update records. And there's ways you can do this, right? Just like any other appointment, write it on your calendar, reserve a time. And I understand that looking at documents, and especially financial documents, is not the most fun thing to do. So perhaps take a little tip from me. What I do is I schedule my monthly check-ins, but I buy myself a little treat before I do it. So maybe I go get a coffee and a croissant, and then I do my monthly recording, and making sure that I have all my documentation. And so that's a way to incentivize it. But schedule that and honor that time, because again, business owners that are waiting till the end of the year or even the end of the quarter, it becomes really messy, and then they're spending hours, if not days and weeks, trying to untangle the mess that they've made and trying to make sure that they have all the documentation in order to be able to file a proper tax, income tax and business tax. Okay, so let's share with the group. I shared with you some ways to stay organized. What are ways that you stay organized, when preparing for taxes or making sure that you're keeping track of documents in your household or for your family or for school? I would love to hear from as many people who want to share. What's one way you stay organized?
Write things down in my organized planner.
Yes, write things down. I always say that pen and paper have a way better memory than any of us.
Go ahead, Natalia.
Beautiful. Sorry, I want to make sure.
Sure.
I'm the same way. I like paper. I like writing everything down. I feel like it's a lot faster. And then I'm a big fan of planners, and then but binders with plastic sheets. Is that what they're called? Or sleeves. So I put paper in it, and I feel a little more like they're protected.
Yes, I wish my camera was working right now. I could show you that. I have like the file folders and the binders with the sheets for my two businesses, and then the records for every year. So I keep my little binders. So I'm with you on that.
Yeah, and Bethany says she has a file folder and also online.
Yes. How many of you use Google Docs or something like that to keep organized?
You have them stumped. There's Sierra and Natalia. And Bethany says, I just recently found some use for docs.
Yeah, I like to use spreadsheets. So Google Docs or Excel are two of my best friends. Okay, well, if anyone has ways that they stay organized and you'd like to share those, just unmute yourself and share or drop in the chat, but I'll keep us moving along. Let's talk a little bit about understanding deductions and credits when it comes to taxes. So there are common deductions on business taxes. One thing I want to note is that tax laws often change. So what's deductible last year may change this year. So always work with a reliable tax professional. But here are our current examples. Also note, this is why we are talking about documentation. If you don't have the proper documentation, sometimes we won't be able to deduct these things on our taxes, because proving that you purchased those things or have those things, or if you don't have certain proof and documentation, there's really no way that we can prove that. And that's why I'm stressing tonight how important writing everything down, documenting things, and having systems in place to be organized, so you can have these deductions. So here's 4 common deductions on business taxes. So home office expenses. If you're a business owner today, you're going to need a computer, right? We do so much of our work on computers. You might need a printer. If you are doing kind of a lot of you were talking about online stores and boutiques, that means you're going to need boxes and wrapping and tape and scissors and all of those things, a printer, a label printer, right? Label paper, ink cartridges. Those are all home office expenses, and all of those expenses are tax deductible. So that is why you want to make sure that you're keeping the receipts, you're purchasing those items with your business bank account, checking account, or your business credit card, and then you're also entering those in your QuickBooks. Or if you're not using a software like QuickBooks, you're making sure that you're writing them down or using Excel or Google Sheets to make sure that you're always entering the expenses. So anything you're purchasing for your business. Business supplies in a similar line. Let's see. Let's talk about, we have a few folks here that are restaurant owners or aspiring restaurant owners. So business supplies would be your ingredients, all of the things that you need to buy in order to make the food that you're cooking in your restaurant. Business supplies would be bowls and mixers and utensils and frying pans, and all of those things are business supplies. Now, if it gets to be a larger thing, so say we're at a restaurant and we need to buy like a stove, an oven, that would be business equipment, which is also tax deductible. So again, it's very important that you're keeping the receipts for those. And anytime that I am purchasing business equipment, so one of my businesses, I do photography and videography. So equipment for me is something like a MacBook, a professional camera, professional lenses. Those are equipment that is costing thousands of dollars, and so I get to deduct those costs in the year that I buy them. But I also make sure that my accountant has a picture of all those things, the license numbers, if they are things that have that. So they're kind of looking at the depreciation of those items year over year as well. Because usually in the startup phase of a business is when you're buying those big pieces of equipment, because you need the equipment first to be able to actually run the business. So again, just stressing that if you're buying it for your business, that you're keeping record of it so you can share that information with your accountant so it can be a tax deduction. Vehicle uses for business. So you can't just tell, the state and the IRS that I have a car and I use it for my business. You have to document the miles that you're driving. for business related mileage. You can't be submitting the mileage that you drove to drop your kids off at school, or go to a friend's house, or go on vacation. It can only be the mileage that you're using for your business. And so the most common thing that clients I work with are using to make sure that they're keeping track of this so they can give this information to their accountant for taxes is either keeping a clipboard with a piece of paper and a pen in their car, and every time that they get in their car and they're using it for their business, they write down where they're going and why they're going there. And then once they're done with the trip, they've recorded the miles. So maybe it was 24 miles, and then they're writing down what that round trip mileage was. There are also apps that you can use on your smartphone to track mileage, but I think a lot of people just find it's easier to kind of keep that visual clipboard in your car. So you see it when you get in, and that reminds you to write down the mileage if you're using your vehicle for business. And then another common tax deduction is marketing costs. So if you're a business, you need to make sales. And the only way to make sales is by making sure people know that your business exists. So you might have advertising costs, printing, mailing, multiple things kind of fall under the bucket of marketing costs. And once again, these are just really examples of showing why it's so important to document all of the things that you're spending your money on. What I do is I work with a certified public accountant, a CPA, who specializes in business taxes. And what I provide him at the end of the year are all of my expenses, everything I purchased for my business, and I categorize them. So I might have home office expenses, business supplies, business equipment, vehicle, marketing and advertising. And this is a Schedule C. This is something I'm going to share with you, but I categorize all of my expenses. So then my accountant can tell me how the laws have changed year over year, and he can make sure that he's deducting everything that is legally possible, because I have given him 100% of all the expenses that I had that year with my business. So at the end of the day, the best thing you can do is write down every single expense and keep all the receipts for anything you're buying for your business. Now, different than deductions are tax credits. So tax credits are dollar for dollar reductions in the amount of taxes you owe to the government. Unlike deductions, which lower your taxable income, credits directly reduce your tax bill. Tax credits are similar. They come and go, sometimes based off of what our government is providing, what the current laws are. And so this is another thing that why it's important to work with a professional tax accountant is that tax credits change. During the pandemic, we had different tax credits. Some tax credits that are pretty common right now are hiring employees, energy efficient upgrades, earned income tax credit, child tax credit. And so these are generally things that, again, if you're keeping documentation of things that you're spending your business money on, and then questions your accountant's going to ask you, they might, be like, oh, okay, so do you have children? Yes or no. And if you answer yes, they might be like, oh, we actually have a child tax credit right now. So this is what I need. This is what I need you to do. I see Billy has his hand up, so I just want to pause so we can make sure Billy gets what he needs.
Hi, sorry to interrupt. Leah, can you send Ayan to the
Yeah, I
breakout room?
don't think she's here. Let me
Oh.
see if she came later. I think she's the last person we need to talk to, though, correct?
Correct.
Yeah. She is not here today, so that looks like you have gotten through the folks you needed to.
Yeah, I'll let Avery know to catch up with her next time then.
Okay, perfect.
Thank you,
Thanks,
Leah.
Emily. Great. Thanks, Emily.
No problem. And so, again, important to just kind of know what you're doing. And, you know, I make sure that I talk to my accountant, not just about my expenses and the money I make, but also any, you know, business updates or life updates. And so I have a son. He is 6 years old. So it was really important to let my accountant know that, 6 years ago when I was expecting my son, hey, I'm going to be having a child. So he would be able to make sure that any sort of child tax credits that are available, that I was making sure I was getting that credit. He also then advised me to make sure that I'm documenting every dollar I spend on childcare so I can get him that total at the end of the year as well. Since I run my business mostly out of my home, last year my furnace went out about this time, and so I had to get a furnace. And since I run my business out of my house, that utility cost and that part of my house is a portion of my business, right? You wouldn't expect to go to an employer, right? Leah wouldn't expect to go to Hubs and for them to not have heat working. Maybe sometimes it feels cold, but for the most part, if you go to a place of business, you're expecting the heat to work when it's cold or the air to work when it's hot. And so just the same as when you're self-employed. So when I told my accountant, hey, my furnace went out and I have to buy a new furnace, he said, make sure that you document all of those things. And if you can get an energy efficient furnace versus, what other options are on, that's going to be a tax credit. So again, it's just really important to have these conversations around a lot of different things, even if you don't think that it would apply to taxes. It's better just to kind of have those conversations and be really transparent with your tax professional about all the things that are going on in life and in business. And generally at the start of the year, my accountant and I will meet and he'll say, okay, tell me everything that's new, or is there any major life events or purchases that are coming up that we should be thinking about? Now let's talk about some deadlines and resources. I think one thing to remember is, so I have been a business owner for over 10 years now, and I still have a lot of questions about taxes, but I've been filing and doing, personal taxes and 2 business taxes now for 10 years. And so, I just want to say that because it's okay that some of this feels overwhelming or confusing, because even after doing it for 10 years straight, there's still things that I get confused around, or the law changes. And so certain things that used to be true when I file taxes are no longer. So things change. And that's why it's really important to stay up to date with deadlines and resources that exist. So, because what you learn today, next year could change. And so I just want to make sure that you don't think that once you've learned about taxes, you've learned about it and you don't have to ever learn about it again. it is a topic that has some changes, sometimes minor, sometimes big changes every year. So it's important that every year you're kind of, looking into what's going on with my taxes, my business taxes. Take a tax workshop if you can, meet with an accountant if you can. And I'm going to actually provide you with some other resources as well if you're not in a position to hire an accountant at this point. So here are some key dates for taxes. So write these down. Everyone told me that they have different sources of organization. So put these in your calendar, reminders on your phone, or if you're still using paper calendars, make sure to write these dates down. I always feel like these dates sneak up on me every year. I'm always like, oh, I'm going to get so ahead of it. And then all of a sudden it's April 15th, and it always comes faster than I think it's going to. So key dates, January. January is when you need to send out any 1099 documents or W-2 forms due to employees or contractors. Again, that goes back to the slide where I talked about 1099 contracts. You need to issue those for anyone that you paid over $600 to for services, or if you did a job that was $600 or more for a business, they will be issuing a 1099 to your business. So January is when those things need to go out. So those are usually you're receiving 1099s or W-2s and health insurance documents in the month of January. March 15th is when S Corp and partnership returns are due. Now, most startups that I'm working with are sole proprietors or single member LLCs, which is probably what most of you, if you do choose to register a business, you probably will register as a LLC. And so your tax deadline is going to be April 5th, just like individual income taxes. So you file your individual and business tax returns at the same time. So if you remember earlier in the class, I told you that when I started my business 10 years ago, I got a little letter in the mail from the IRS saying that I had made a mistake. The mistake I made was the sales and use taxes in Minnesota. I had filed my income and business taxes. So I thought, I'm good. I did everything I was supposed to do. What I didn't understand is that there is a separate sales and use tax in the state of Minnesota. And so I knew that there was sales tax, but I didn't know that there was use tax. And my businesses that I run, there are some services I offer that do require sales tax. And there are some services that I offer that do not require sales tax. It is my responsibility as a business owner to understand what things I sell that require sales tax and what things I sell that do not. So if you are a business owner, it is your responsibility to understand what sort of taxes you need to be charging. And I will make sure that you receive the Minnesota resource that outlines kind of what percentage of taxes that you do need to be charging depending on what sort of products or services you're selling. Sales taxes can also change based off of what county or city you're selling in. And so just note that sales and use taxes aren't something we're going to dive deep into this evening, but it's really important that you understand that these are also two types of taxes that you are responsible for as a business owner. So a sales tax is a tax businesses collect from customers when selling taxable goods or services. So in a lot of the businesses that you're selling, there are going to, or a lot of the businesses that you're running or thinking of running, there will be sales tax. Now, use tax is a tax businesses pay on taxable goods or services purchased for use when sales tax was not collected. So, for an example, an out-of-state purchase. I'll give you an example. My business, Loving Cupcakes, when I started that in 2014, is a creative events and photography, videography business. My creative events included canvas painting classes. And so I had a wholesaler in North Carolina that would sell me basically truckloads of canvases. There was no taxes on those canvases or the art supplies like paint brushes and paint that I would purchase from this wholesaler. This would be a taxable item had I purchased them in the state of Minnesota. So I had to make sure that I was documenting that and filing the use taxes. So the amount I wasn't paying, I had to make sure that I was paying that into the state. And so those, again, are just another thing to work with your accountant on and understand and keep track of. Now, depending on the size of your business, sales and use taxes can be filed quarterly or annually. And again, that's going to be your responsibility in working with an accountant to determine how frequently you need to file your sales and use taxes. And again, a reminder, not every business is going to have sales and use taxes, but just like income taxes, even if you have $0, you're not collecting sales tax, you have no use tax. Even if it is $0, you still need to report into the state that it was zero. So a good note of taxes is you just always file regardless. And so even if there was no transactions in that year, no money made, no money spent, you still need to file. So here are some resources for staying compliant with your taxes. The Minnesota Department of Revenue is a really good website. I'm actually going to stop sharing this screen and kind of walk you through some of the things on that website. Okay. So again, I'll make sure that Teacher Leah gets this website if you don't have it. But the Department of Revenue has really great resources for businesses. There's tax professionals. This is also where you're going to create a login for a business. And this is where you're going to come to pay your sales and use taxes. And so, but one of the things, since many of you are in that kind of idea phase or thinking about starting a business, there's a resource here for starting a business. So these are things that you would want to really take the time to read through or understand. Click the links. There are some YouTube videos that are here as well. But it kind of, and they also have videos here. So there's a whole YouTube channel if you're someone that learns best through audio and visual. I've also attended webinars. So after I had the little mistake with my sales and use tax, I really wanted to make sure that I understood what those were. And so I just came here and signed up for these webinars. They're free. And anyone can sign up and register for them. They're online. So as long as you have access to a computer and Wi-Fi and an email, you can sign up for those webinars. And they also have some classroom training. I'm not sure if some of these have fees associated with them. But again, they're all worth kind of looking into. There are lots of resources for you to help make sure that you're getting your business set up correctly, and just on a good, have a good start with those. Okay, now I'm going to switch back to the presentation. So a few other resources, and again, I'll make sure that you all get the links to these. There's a volunteer income tax assistant with the IRS. There's the AARP Foundation Tax Aid. And if you're in a situation where you can hire a licensed certified public accountant, I highly recommend that. And try to find someone that you work really good with, someone that you trust, so then they can be your CPA for multiple years. It is much easier to have the same accountant helping you with your taxes year over year because they start to get to know you really well, your business really well. You're able to ask them questions. They're able to ask you questions. You can have very honest and direct conversations to help, make sure that you're optimizing your business deductions and tax credits and that you're staying compliant. So here are your next steps. And again, even if you're not a business owner today, these steps apply for your personal income taxes as well. So first, review your financial records now. Knowing your financial situation, knowing what's in your bank account, understanding how much money you make every month and how much money you spend every month is very important. It's so important, especially if you want to be a business owner, because if you do not have your personal finances figured out, in order, and organized, it is going to be very challenging to have your business finances organized and in order. Also, when you're starting a business, when you're looking for investments or business loans, the first thing that they're going to do is look at your personal credit score and how your personal financial situation is. And so making sure that you understand your personal financial situations and you have records in place is going to set you up in a really good spot to also do the same thing in your business. The second thing is set up an appointment with a tax professional. Again, I think it's very important to work with an accountant and to do both things. So for you to stay educated and learn more about taxes, but also hire a professional. 3, start to explore software and tools to simplify your process. So you'll learn more about QuickBooks in this class, but you can also go to QuickBooks.com to kind of look at it yourself. If you're still writing everything down with pen or paper, maybe start to explore ways that you can digitize your records. So using Excel or Google, but making sure it's in the cloud. So if your computer or hard drive would ever crash, it's on a cloud so you can access it. Attend a workshop. Women Venture is hosting a tax workshop in December. So I'll make sure that Teacher Leah gets that information. So if you wanted to attend that tax workshop, you could do that. And then right now, I want you to take 1 minute to write down one thing that you can do today or tomorrow to start preparing for your taxes. Because again, we are almost at the end of the year. January is going to be here very soon, which means it is time to start preparing for and filing for our 2024 taxes. And so write down one thing you can start to do tonight or tomorrow to prepare. And then once you have done that, I want you to share what that is.